All right, it's been a while since I have gone back to my penny stock roots, so I figured why not give the people what they want? I've had a lot of folks asking me about this, and so in this video, I'm gonna give the 3 stocks that I'm watching and considering a strong buy under $10 a share. Not only that, but I'm actually gonna give you a bonus stock at the end of this video as well that's under $1 that I think has a lot of potential here. Now, I wanna preface this by saying that these stocks are priced down here for a reason, and it's not because they have amazing balance sheets and they have years and years of growth ahead of them. They might, but then again, they might not. These are all still very much in their speculative stage of growth and all that good stuff. The potential here could be great, but we have no idea how exactly this is going to all play out. The potential is really what you're playing here. And so understanding the risk going into this is going to be really key. I can already see people sliding up into my DMs asking me what happened to this stock, especially if it's a year from now and things didn't work out the way that they thought they would, all that good stuff. But listen, this is, again, a penny stock list. And if you go into this with the understanding that penny stocks are always going to be high risk and sometimes they just don't work out, then I think you'll be fine. If you think that you're going to get into one of these penny stocks and it's going to go to the moon and you're going to be driving around in Lambos for the years to come, it's going to change your zip code, all that good stuff, just pause for a second and realize that that is probably not going to happen. So with that all out of the way, let's go ahead and get to the top 3 stocks that I am watching here that I think have a lot of really great potential. All right, guys, so the first stock that we're gonna go over that's under $10 is going to be FRSX. And so FRSX is Foresight Autonomous. It is a company that designs and develops cameras and sensors for autonomous vehicles. Now, we know how EV stocks have been as of late, and those are just EV manufacturers. But the manufacturers need products to put into those vehicles as well, and that is where companies like Foresight actually come in. Foresight has gone on record to say that their sensors and cameras do extremely well under dark lit conditions, poor weather conditions, and all that good stuff. And they have announced that they are in a pilot program with what they call a multi-billion-dollar Japanese manufacturer. Now, as an avid car guy and tech head, I know that there are only 3 major manufacturers in Japan that actually matter, and that is Nissan, Honda, and Toyota. Now, I think that the one that makes the most sense would be Toyota, since they have been going all in on EVs, and that would be massive for this company. So if the rumors are true that potentially there's something going on with them and Toyota, I think that Foresight could stand to double or more from where it's at right now. Not only that, but there's rumors flying all over the place with this one in particular, from Mark Cuban being invested in it, which I later found out was a rumor. And then also there is a rumor that seems to have some legs to it that they are also working with Tesla and their Cybertruck vehicles. So we'll see if that actually comes to fruition as well. If it does, the stock will continue to skyrocket. Some other great things here are their share structure. It's not a very large share structure, and they have been doing some offerings, but they haven't been anything gigantic. And so I think that bodes well for the stock as well. So you're not going to see a whole ton of buying to get this thing moving, which is great stuff. Now, as you can see from the chart, this has already gotten a lot of movement already, but I think that there's a lot of room for this to grow, especially if we find out that they are working with Toyota or even Honda, Nissan. Any one of those is going to move this thing. But Toyota in particular, I think is going to be the biggest move that Foresight will have if we find out that that is the company that they're working with and this pilot program does go through. Also, if we find out that the Cybertruck indeed has Foresight products on it, this is also going to absolutely explode. So I think there's a lot of potential here for Foresight as long as they can keep those offerings under control. And honestly, I think that they have up to this point. We've seen a couple of offerings from them, but they haven't been anything that would actually cripple this stock. We've seen pullbacks here and there after offerings came out, but none of them really impacted it for any kind of length of time. So this is one that I think is going to do really, really well. FRSX, Foresight Autonomous, definitely one to keep your eye on. Okay, so this next one is going to be AMC, as in AMC Theaters. And I got to be honest with you, I hate this company. I hate the play, but it probably will move a ton. And I want to explain to you why. If we look and take the example of GameStop, for example, it had a ton of short interest on this thing. And despite the fact that GameStop is losing $300 million a year and they are up to their eyeballs in debt, short interest came in on this thing, and the bulls came in and have squeezed this thing all the way up from $5 a share to over $70 a share in about a week's time, which is absolutely incredible of a move. Be careful with that one though. It has already moved so much that I think that buying it all the way up here is absolutely insane. Although I said that last week too, and here we are. But in all seriousness, AMC does have some catalysts going for it. Potential reopenings. Maybe people will want to go back to movie theaters. I don't think that's actually going to be a thing. In my opinion, long term, I think that movie theaters are going to be more of a novel idea. I mean, I'm sure your grandma thought drive-in theaters were going to be around forever, and look where we are with that. I think that movie theaters in general are probably going to go by the wayside as well, especially when you're seeing companies like HBO, Fox, and Disney releasing movies not only in the theaters, but also to stream at the same time. Now, if I was, somebody who was an avid moviegoer and I just loved the movie theater, fine. But I think for most of us, we'd much rather stay at home and watch that movie and, spend $20 on maybe some snacks and drinks versus the $50 that you're going to spend on just popcorn, water, and the ticket itself. But the short interest is definitely the key here. And if you look at the chart on AMC, it has already started to move here. I think as short interest actually starts to accumulate on this thing, which in my opinion, it probably will. If it resembles anything like it did with GameStop, I think AMC definitely has a lot more room to run, at least double or triple from here if the squeeze starts to really get crazy. Now, the key resistance on this one here, I think in my opinion, is right around $4.30. So if we get above that area and start to develop a really nice cup and handle pattern on AMC, that squeeze continues, I think this is actually going to be one that really pops off. Now, again, I want to reiterate that this isn't one that I would consider being one that I would hold on to long term. But in the moment that we're in right now, I think that this is actually primed for a really nice short squeeze setup. Not something I would hold on to forever, like I said, but this could make a really quick, nice, easy pop. And if you have money to spend to, chance on something like this, and I want to emphasize chance, and that this is probably going to be more of a gamble than anything, but AMC definitely has the potential to pop off very similarly to what GameStop did. All right, so I got to admit, this next one, I actually cheated a little bit. It is just over $10 a share, but I love it a lot, especially with the rumors that are flying around this one as well. And if they come true, wow, this is going to really go off as well. And that is ZNGA, ticker symbol ZNGA. ZNGA has been one that I've actually loved for some time. And I actually talked about this about 6 months ago when it was around the $6, $7 range. And now it's just popped up over $10 a share. Now, why has it done this? Because there are rumors flying around that Tencent, Chinese company, can actually or will actually acquire ZNGA, which could be huge for the company. I think that ZNGA definitely could stand to be acquired by a larger company, as that I think that the way that they're set up right now, they really do need some help from money. They just have always struggled with debt and that sort of thing. Obviously, the pandemic has helped them a little bit because if people are at home more often, then they're going to be playing video games on their phones, all that good stuff more often. And if Tencent acquires them, this is going to be monstrous for the stock as well. Now, as I said, this has already started to make a move and popped up over $10 a share. I've really loved ZNGA. I love the company. Ever since their new CEO took over a couple of years ago, they've made a really nice turnaround. The pandemic, of course, helped them out too. Because everybody was at home, they're playing games on their phones, all that good stuff. But if we look at the chart, and if Tencent actually does end up acquiring them, this thing's going to continue to go off. And I'd have to go actually all the way back out to a weekly chart to kind of give you a sense of how this thing can move. Just this past Friday, if you're watching this at a later date, this went crazy on that rumor potential for Tencent. Now, more and more analysts are on board with this, thinking that there's definitely some opportunities here, and it seems reasonable that Tencent could actually acquire ZNGA. And again, like I said, if this comes to fruition, ZNGA could do really, really well. It just popped up over its former resistance right around 1065 after pulling back down here. If you see pullbacks below $10 a share, I would be scooping this up. It popped and just went up over $11 a share. I think, though, that this could potentially be something that we don't see come back down below $10 for the foreseeable future. And if that merger goes through, it's going to be incredible. Potential supports for this, if this does indeed end up falling below $10 a share again, I think that it would be reasonable to consider scooping up a position or adding to your position around $9.50. And then if it does end up pulling back down even further than that, maybe around 9.15 could be another area where I would consider accumulating a position. This is one that I think actually, even if this 10-cent merger doesn't go through, is a really great stock that I would consider continuing to hold because of the quality of the company that they have. They've been able to raise a ton of money. Things, like I said, went really well with them during this pandemic. They were one of the ones that, you know, it is what it is, but they did end up benefiting from something like this. There's a lot of companies out there that did. Zynga's just one of them. All right, so I'm gonna give you one freebie bonus ticker since I kind of cheated on Zynga a little bit since it's priced over $10 a share. And as promised, I'll give you one that's priced under $1 per share, and that is ticker symbol MITI. It is trading on the OTC market or over-the-counter market, not yet on NASDAQ, and I think there's a lot of potential with this one as well. Mitesco Inc. is the company, and they are designing a luxury minute clinic called the Good Clinic. They've just broken ground on some things, and this leadership that's surrounding around this particular company was responsible for the Minute Clinic that was acquired by CVS way back in early 2000s for $170 million. And so I think that this has definitely got some potential behind it, especially with the leadership that's involved. Again, it's priced under $1, so take that for what you will, but this definitely has some potential, and I think that we see this up and over $1 very, very quickly. They plan to actually uplist to NASDAQ rather soon. Their share structure is fantastic. There's no dilution going on with this one, which we know is a known problem in over-the-counter penny stocks. And I think this one has a lot of potential, despite that it's already moved up a ton in recent days. There's a lot of potential here. It's already moved up over its resistance at $25 or 25 cents, I should say, and it is on its way to around 57 to 60 cents per share. I think we see that rather quickly, especially since we've started to see a lot of money roll into this thing from other institutions. We just got word recently that about $5 million was invested into Mitesco. And I think there is more money coming for this one as well. So if you guys are interested in playing some sort of penny stock that is valued under $1 per share, this is one that I think could double, triple, or maybe even quadruple or more your investment, even buying it here at 27 cents per share. All right, so we're getting to the point of the video, and I'm actually gonna start doing this every video that I record. So if you guys wanna leave some comments on this one, and they might get featured into the next video, but if you watched last week's video, we talked about the truths behind trading full-time and what you really need to know. And Savvy Money Show made a really good point. I'm just gonna read the comment here. It says, if you can exceed your earnings for more than a year, not this year, then once you have built up 6 to 12 months emergency fund and trading pot plus money for the equipment. And I actually thought that was really phenomenal advice. Not just taking this past year into account and thinking that this is how it's always going to be is going to be really important for you. Make sure you're taking a good set of data points, not just from this year, but years past, and maybe even this year, because this year could be completely different than what it was last year as well. But if you're only taking a small time frame and thinking that you can just do this full time for the rest of your life, I think that you need some more time to really kind of digest all that and ask yourself if this is actually realistic and sustainable, because really it's probably not. And so that's going to do it for me, guys. Thanks so much for tuning in. As always, I'll see you all before the bell, and B Smith is out.